Hello, everybody. This is Patrick MontesDeOca with the Seeking Alpha report published on June 11, 2018. Signs of inflation except in gold and silver. Summary. When we look at the dollar index, the US dollar index cash bar chart, we can clearly see that the US dollar is building what appears to be a bearish chart. We have begun to see the gold and silver ratio declined from 81, 82 levels or higher, and it is beginning to confirm that the silver market is about ready to go. The CRB index is picking up, so it's only a question of time before we see demand once again ignite in the silver market. Signs of inflation except in gold and silver. When we look at the dollar index, the US dollar index cash bar chart, we can clearly see that the US dollar is building what appears to be a bearish chart, with the possibility that we could revert to the downside aggressively upon failing to close above the long-term resistance of the 200-day moving average of 94.91. One of the clear and obvious data points with regards to the future of the US dollar is the level of inflation that we have seen in the commodity markets in the past year. Regardless of the mainstream media lack of reporting of the economic facts about inflation, we can look at the individual sectors and see what they are telling us with regards to inflation. Crude oil is up 40%, wheat is up 21%, cotton is up 15%, rice is up 13%, wool is up 27%, copper is up 20%, steel is up 10%, iron is up 5%, coal is up 39%. What this data shows is the tremendous and temporary suppression of the price of gold and silver by Western central banks. Gold is up only 3.5%, while silver is down 2%. I believe that we've come to the end of this suppression in the price of metals as we began to see the pressure of the commodity markets begin to ignite what appears to be inflationary expectations. In a March 12, 2018 Seeking Alpha report, I looked at the gold and silver ratio and argued that it signaled a coming massive silver rally. We have begun to see the gold-silver ratio decline from 81 to 82 levels or higher, and it is beginning to confirm that the silver market is about ready to go, with the economic data points confirming that the CRB index, a measure of inflation, is on the way up, with geopolitical tensions increasing in the Middle East and global economic policies that are sparking a possible trade war. Many factors in the international economic environment are positioning the silver market for an explosive move to the upside. It looks like the central banks have successfully manipulated the price of silver down 2%. The silver market is not very liquid asset, and it's called the poor man's gold. It's obviously been manipulated by central banks to keep the price of gold at bay to where they are controlling the price to extremely historic suppressed levels. When you compare the price of gold and silver to the debt levels and to interest rates, it baffles me why the gold and silver aren't trading significantly higher. Even silver has reverted to its mean, has not reverted to its mean, as the CRB index shut up this past few months since the beginning of the year. Central bank manipulation in the paper markets has distorted the true price discovery of both precious metals. The VCPMI in silver, supply and demand levels weekly. I want to take a look at the variable price, at the variable changing price momentum indicator, the VCPMI. And what it's telling us as we come into next week by identifying the supply and demand levels for short-term traders looking for opportunities in the silver market. Silver closed at 1674 and closing above the nine weekly moving average of 1666. It indicates a bullish trend coming into this week. The VCPMI also tells us that if the price closed below 1666, that it would negate this bullish trend to neutral. For self-directed traders, you can use the 1666 point as a pivot point or a protective stop. With the market closing above the weekly price momentum indicator, the average price of 1668, we're coming into this week with a bullish price momentum. The VCPMI also tells us that if the market closes below 1668, it would negate this bullish price momentum to neutral. This is a second level protective confirmation for self-directed traders, that if the market activates the signal, it gives you a specific call of action to take. If the market closes below 1668, it would activate the extreme below the mean buy one level of 1643. The buy two level is 1611. If the market comes down to activate the B1 level, the VCPMI gives you a 90% probability that the reversion will occur back to the mean of 1668. If we come down to the B2 of 1611, there is a 95% probability that the reversion will bring the market back to 1668. Coming into this week and closing above 1668 has activated the extreme above the mean of sell 1 at 1699 and the sell 2 of 1725. If you are long coming into this week, use these levels to lock in profits and go neutral. If you get close to the level, use about a 10% margin of error to liquidate your targets. If you have multiple positions, you can use the second level of 1725 to liquidate your multiple positions and go neutral. This is to give you an idea as a self-directed trader, a range where you can make a decision to lock in profits as we validate and confirm this trading range in these numbers. My conclusion is that as I look at the data points for this week, particularly the CRB index, I feel that inflationary expectations basically have been confirmed. What has also been confirmed is that the continued suppression of metal prices by Western central banks, as we continue to see inflationary pressure with crude oil continuing to go up, it is inevitable that eventually the prices of precious metals will catch up and adjust to their economic intermarket relationship for the price of gold and silver to crude, gold and silver to cotton, and to every commodity in the CRB index. With the gold and silver ratio indicating that the market has stopped on the index around 82 plus levels, it is clearly given us a long-term picture that the path of least resistance for the silver market is to the upside. We're going to continue to focus on the price of silver in reports over the coming weeks, since I feel the profit potential in silver is the most attractive from a long-term perspective of any asset in the financial world. Buy corrections. We are offering a 2-week trial for our live trading room at the Equity Management Academy. If you would like to have a 2-week trial, please give us a call at 805 area code 418-174-1744 and talk to one of our representatives. That's 805 area code 418-1744.